At the 2012 China Mining Expo in Tianjin over the weekend, Guo Jianwei, Deputy Director of the Monetary Policy Department of the People's Bank of China, said the private mining companies should seize the opportunities that China's domestic banks can offer in acquiring overseas resources. Guo also feels that the increased use of Chinese currency to settle international deals should encourage private companies to make direct investments in foreign countries. Foreign investment that has already started by the Chinese state-owned banks, something that Guo feels is an eventuality. In the past, Chinese private mining companies missed many opportunities because of the complicated approval process companies must go through to use foreign currency in overseas investments. That obstacle will be overcome as the renminbi becomes more internationalized, enabling private Chinese companies to make direct investments both domestically and abroad using a renminbi financing system. That will help feed investors' enthusiasm for overseas mining industry and accelerate the internationalization of the renminbi. By the end of September, 97.8 billion yuan worth of loans had been approved to be issued from the overseas yuan financing system, according to the figures from the People's Bank of China, the country's central bank. In terms of dollars, that comes to $15.5 billion worth of loans based on the yuan. According to the Ministry of Commerce, in 2011, private companies made non-financial direct investments worth $30.78 billion. That was equal to 44.9% of the total investment from China, a percentage up 15.4 points year on year. Mining, as it turns out, is the #1 overseas industry for China. About 13,500 domestic companies have established up to 18,000 companies abroad, among which about 90% are private enterprises. Their investments mainly go into mining. Private mining exploration companies in China had $2.25 billion in annual revenue on average last year, 4 times more than the figure for 2007. According to the figures from the All China Federation of Industry and Commerce, the average value of those private mining companies' assets increased from $432 million in 2007 to $2.958 billion last year. While at the expo in Tianjin, Yang Yihang, Deputy Director at the Ministry of Commerce Investment Promotion Agency, said that the mining sector is the 4th most attractive industry for China's private investors. It falls behind trading, services, and financial industries. With China's appetite for mineral resources, investments into mining will likely diversify into new forms, buying foreign assets and providing outsourcing services. Xiangguang Copper Company, a privately owned copper smelting, refining, and processing group based in Shandong Province, announced plans in February to acquire a 10% stake in Spain's EMED mining company for $15 million. Rongtai International Group Holdings, a steel trader and shipping company in Fujian Province, bought 8 iron ore mines in Australia in August, enabling steel mills in the province to use iron ore produced by a local company. This has been the recent trend to go upstream in acquisitions and purchase raw materials and mining claims. Chinese mining is buying smelters and processing companies, moving into the upstream mining business. Chen Xianda, vice chairman of the China Mining Association, said that during the first half of 2012, China made 64 mining investments involving $1.42 billion in 32 countries. The projects pertain to coal and metals. Purchases were high in Australia but down over the past year and have gone up in Latin America. Yang Yihang, Deputy Director at the Ministry of Commerce, believes that China's private investments in the overseas mining industry have been welcomed as the global economy continues to recover. For small private mining companies, this is the opportunity to expand overseas. The Chinese government has meanwhile carried out a series of policies to encourage private capital and invest in the resources and mining industries. The Ministry of Land and Resources, together with the All China Federation of Industry and Commerce, has published instructions that call for private capital to be invested in the resources industry. More than just mining resources, they're encouraging private investors to participate in the exploration for non-conventional sources of oil and gas as well. The privately owned Jinan Yuxiao Group Company, formerly a real estate developer, applied in late October to establish 5 more mining subsidiaries in Mozambique. Since establishing its business in the country in 2005, it has acquired 7 mining rights and 60 exploration rights. The Jinan Yuxiao chairman Wu Tao said they will start making profits at 2 African mines at the end of this year. It also owns exploration rights in gold, iron ore, and coal mines in Africa. Compared with Chinese state-owned companies, which have seen many failures in their attempts to make acquisitions in the overseas mining market, private companies are finding it easier to win approvals from foreign governments for energy and resources investments. Experts at the forum warned private companies to do more to avoid risks when undertaking overseas mergers and acquisitions, making detailed strategic plans and conduct enough preliminary research before going into contract negotiations are prudent elements to expanding overseas.